to the show. We are going to be connecting with a management, and I'm talking about Jindal Drilling. This particular company is into offshore drilling, and the December quarter was actually decent for the company, but the margins are still holding to be at 32%. Let's try connect with Pawan Kumar Rustagi, who is the CFO of the company, and understand what is the outlook going ahead for FY24. Hi Pawan, a very good afternoon, and thank you so much for joining us today on ET Now. Firstly, we believe that the charter rates are experiencing an upward movement owing to the low supply of the offshore rigs. Where do you stand currently, and how much more upside do you foresee?
Actually, I tell you, for last 1 year, rates are increasing because there is a high demand of jackup rigs in India as well as globally. So earlier these rates were 25,000. We were deploying the rig at the rate of $25,000 per day, and last three contract we get at the rate of 44,000, 48,000, or 80,000. And there one more rig is due in the next year, for which we are expecting we will get the rate of approximately $1 lakh per day.
Hello, Mr. Rustagi. This is good afternoon, Ankita joining in. Tell us, what is the utilization rate currently?
It's 100%. Actually, our group is owning the 6 jackup rigs, out of which 5 are in the Indian Ocean, and 1 rig is in international water. And out of 5 rigs, 3 rigs are deployed with OnGC in the current contract. 2 rigs are in refurbishment, for which we have already the contract, and contract would be started in the first week of May or last week of April 23. And that is at the rate of $44,000 per day and $48,000 per day. Earlier, these contracts were at the rate of $25,000 each.
Okay, but just to follow up there, considering the current demand scenario, you expect your utilization rate to sustain at this level?
100%. Actually, I tell you, if we are having the contract with the ONGC, and there is a 3 years fixed contract. Once the rig is deployed at a particular rate, then rate is finalized up for 3 years. So whatever we have booked the contract with the ONGC, that is contract is a firm contract for a period of 3 years. One is at 44,000, one is 48,000, one is at the rate of 38,000, and one which we are expecting a rate of rupees $1 lakh. The new rig which is going to contract is going to expire in October 23.
Right. Also, Mr. Rustagi, Jindal Drilling has been able to maintain margins at 30% plus over the last 4 quarters. Now, with an increase in the charter rates and minimal increase in the costs, do you expect to see margins to expand over the coming quarters?
Definitely. I tell you, out of 5 rigs, 2 rigs are owned in our books, and 2 rigs are of joint venture company, and 1 rig is of the other company. So out of this 2 which are owned by us, whatever increase in revenue that already goes to the profitability, as far as the chartered hire rig is concerned, here the profit is being shared by us as well as the rig owner company. So approximately you can understand 50-50%. So definitely rate increase will boost the profit of the company.
Okay, but Mr. Rustagi, when you say that the margins are expected to expand, can you just quantify that for us? Because your margins for the last 3 quarters have been near about that 30%. But going forward, any number on that?
It may be 40-45%.
Okay, we'll definitely watch out for that. Thank you so much, Mr. Rustagi, for joining us today on ET Now and sharing the company's outlook for FY24.